Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. Welcome back to the show, John.
Jim, pleasure to be back on the show.
John, Scandium International announced on Monday that it plans to study the feasibility of recovering critical metals from its Phoenix copper operation operated by Nevada Gold Mines. Why is the stock unchanged? Wasn't that what we were watching for?
Jim, it was indeed what we've been waiting for quite some time, since May of last year when the company first announced its plan to pursue a site hosting deal with an existing copper oxide operation somewhere in North America where it could test this method of recovering scandium and a whole pile of other metals from the raffinate that's dumped back onto the heap leach pile after the copper that's been dissolved into it has been stripped out through solvent extraction. So why did the stock do nothing when this news came out very early Monday morning? Well, we have been talking about this story for more than a month, thanks to the breadcrumbs that Barrick originally scattered in its Q1 presentation, and then the fresh-baked loaf that it presented in its investor day for Nevada Gold Mines' Phoenix operation, where it actually listed 4 specific elements, zinc, nickel, cobalt, and scandium, that it saw as recoverable from the Phoenix copper oxide portion of that gold copper mine in Nevada. So the news is pretty good. It says that they have signed a letter of intent to initiate a technical and economic feasibility study of recovering zinc, nickel, cobalt, and scandium from the raffinate generated by the copper oxide leaching and SX-EW part of the Phoenix project. But this will take 15 months to complete and cost $2.7 million US to get done, and the press release doesn't really make clear who's going to pay what portion of that $2.7 million. And I think after we've been talking about this apparently already being underway for some time, the market was a bit taken aback, because even in the breadcrumbs that SCY scatters in its 10K and 10Q filings, they had suggested a much better timeline than what is involved here. If they are only starting the CMR study now, and it's going to take 15 months, it's the end of next year before they will know whether or not to proceed and start to raise money and start building it. Whereas in the 10Q, they had suggested a more aggressive timeline where they would have construction start in 2022 and be commissioning the critical metals recovery circuit in early 2023 and commercial production by mid-2023. Now, that wasn't very exciting for Scandium International shareholders who've been waiting for something positive to happen for quite a few years, but at least it was within the reasonable future. Now the press release suggests, it's going to take even longer. But there's something else really going on here. The press release apparently was vetted by Barrick, which censored a number of things that SCY had put into it, which it crafted. It's quite interesting what they have left behind in the press release. The new timeline is one that's kind of discouraging, and so the stock reacted negatively or positively at first and then retreated as people contemplated a number of problems with the company. One, the balance sheet is still showing negative working capital of $1.2 million, and the company still looks vulnerable to a TSX delisting review. There doesn't seem to be any marketing strategy to raise the public profile of the company. A news release of this importance should have had a halt associated with it, an updated corporate presentation on the website, and perhaps even a conference call with the CEO explaining the importance of this new development for the company. And of course, their disclosures continue to be of a minimalist nature, which is why we've started to call this the breadcrumbs company. And the fourth thing that has turned people off is that the biggest shareholder, owning 20% of 70 million shares, Scandium Investments LLC, which is owned by Peter, Chris, and J.C. Evanson, it seems to be perfectly happy that the company limps along on this very slow path to hopefully something that will eventually be a success. But what the good news in the press release is what we have actually been hoping for. It says in there that Nevada Gold Mines and SCY will share the circuit asset on a 50-50 basis, meaning that the concentrates that are produced by the critical metals recovery circuit will be priced at market value and the difference shared 50-50. But SCY, and this is brand new, will operate a downstream refinery on a 100% basis. Now, this is very important news for the market because the company hasn't really talked about a refinery. And so a big question people ask is, okay, why would a company which owns the entire operation share the proceeds of recovering critical metals on a 50-50 basis and then allow the other partner to purchase the concentrates and upgrade them to a higher purity form or some alternative form that's required by specialized applications such as the battery sector? Why would it forego all of that? And the company, SCY, had been hoping to get this type of 50-50 sharing deal and the ability to acquire these concentrates for itself and upgrade them for its own benefit and diversify into the downstream market. And part of that downstream market is making aluminum scandium master alloy, which would allow it to incrementally build the offtake market for scandium so that its other assets, that Ningen deposits, the Honey Bugle deposit, even the Kivenimi deposit in Finland, could become future primary scalable sources of scandium as it marches from 25 tons per annum demand to 1,000 tons per annum, about 10 years or so from now. But there is an important sort of phrase that Barrick left in the press release, and I quote, "From a copper industry standpoint, the CMR can effectively increase mine valuations, potentially lower ongoing environmental management costs, and lower final reclamation expenses." Now, none of these benefits accrue to SCY. They all accrue to the mine operator. So creating this CMR circuit reduces future reclamation costs, and that's for its own account. So this is a reason why Barrick might not even care if this is just break even, and might not care that the concentrates are sold at fair value to the partner. So it isn't really giving up anything. What it is giving up is offset by what it gains 100% on its own basis. So this makes an awful lot of sense. Now, the boilerplate part of the press release, the about SCY portion that's usually at the bottom, that was very interesting, and that's something where Barrick couldn't really do any censorship. And it suggests that SCY is pursuing similar types of relationships. And from what I understand, this deal with Nevada Gold Mines was subject to a non-disclosure agreement. And non-disclosure agreements usually apply to both sides of the agreement. But here we had Barrick talking about this openly to the point where people like myself talked about it and told everybody, hey, look, SCY has this partner, and it looks like they're quite advanced along the way with this whole process. What's going on here? And I think this created a bit of an embarrassing situation for both sides. Barrick may not have been thinking of the importance of this, that SCY, whose CEO is quite diligent about such things as non-disclosure agreements, they are getting lambasted for not telling their their shareholders what's really going on. Only the people with a seat at the boardroom table know what's going on. And so I think the press release came out on Monday and was a bit of a sort of a butt-covering press release that catches up something that happened some time ago. So this negative conclusion that it's going to take another 15 months to find out whether this works, I think that's actually backdated perhaps as much as 6 months. In fact, it may even be around that time in November when the stock started to rise that SCY finally started to get some of these companies to pay attention, which makes sense because once it became clear that Biden had won the U.S. election, all these companies said, we better take all this ESG stuff, critical metal stuff seriously. And so they may have started paying attention to SCY. And SCY may have multiple other such agreements, all of which are already in advanced testing. And each mine site has to be tested individually because the ore composition is unique, the acid mix is unique, what ends up in solution and is recoverable will be unique for each site. So we may actually be much closer to the rollout of everything happening than this press release suggests. And so I think the market reaction, it's taking the news release too literally. It's interpreting that everything's just starting now. Now, the business about the refinery, this is really important because if SCY is going to build and operate a refinery that will deal with the concentrates that even in the pessimistic scenario won't be available until the end of 2023, they need to start on that now. They need to secure a site. They need to do the design and engineering. They need to build this thing, and they need capital for this. And the CTO, Willem Divestine, and the CEO, George Putnam, these are ex-big company salaried people. In fact, both used to work for BHP. These are not the sort of deep-pocketed shareholders of the company such as the Evansons who have the ability to just mobilize the capital needed for this all to happen. Yet this press release is saying it's time to get serious, and that's why I'm also optimistic that the big shareholder, which everybody has seen as just passive waiting there, may finally be ready to step up and say, yes, we are now going to play the role everybody always thought we would. We haven't been able to do this because without offtake orders to justify raising capex for Ningen, there's nothing we can do. But here we are talking about building a refinery, and this refinery site would also host the high-purity alumina facility, which is also something for which the company has a patent pending. And this is something where they make it clear they hope to be able to get some of the feedstock from the critical metal recovery circuits, but they can also do it by just buying the alumina feedstock from the market, from anywhere, and just putting it through the process that Willem has invented and for which the patent pending application is underway, and just build this out. And if it is indeed a more cost-effective way of making high-purity alumina, which is already a $1.6 billion market and continues to grow, well, this is one of those number-crunching type of return on investment scenarios that people who are interested in this really can sink their teeth into. And this is the sort of specialty of Peter Evanson, who took TK Shipping and launched it on a monster growth trajectory. Stock went from $7 to $70 before getting crunched in the big general raw materials meltdown in the past decade. So he has the experience of assembling all these types of people and resources needed to build out something which is really an industrial growth company. And that's the thing that's staring us in the face with Scandium International. It's no longer an exploration company. It's no longer a feasibility demonstration company. It's not even an offtake market development company hoping to own the scandium market because it comes up with 35 tons of orders for master aluminum scandium alloy. It is now a different type of company that can grow the scandium business as a side effect of this critical metal recovery business, plus this high purity alumina business. Completely different scenario, and the sky really is the limit. So this is a situation where all the parties that have an existing stake need to step up and put what talents that they have to bear into the equation and get this thing launched. So I think even though it looks like more of the same limp-along story, I think the company is at a turning point where the stars are all lined up, and the only thing that we do not know is that the key people involved will take the steps to finally launch this into orbit.
We'll have more with John Kaiser right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with John Kaiser. John, during the past couple of weeks, a junior called Deep South Resources collapsed from 20 cents to 4 cents after the Namibian government refused to renew the exclusive prospecting license for the Habe Copper Project. Should we be worried about other Namibian projects such as the Lofdal Rare Earth Project?
Well, that was something that was really of concern to me. The Habe Copper Project in southern Namibia, it's been around for a very long time. It was found in the 50s. Big companies like Rio Tinto and Falconbridge explored it during the 70s. In 2010, Teck took a crack at it and drilled 14,000 meters or so. It's a copper porphyry system, possibly the largest in Africa, which is not really known for copper porphyry deposits, but it has a resource of over 1 billion tons of copper sulfide in the sort of 0.2 to 0.3% range. And Deep South was a shell that acquired this project from Teck in 2017, and they've attempted to deal with what was seen as the big problem, namely a milling and flotation flow sheet that just doesn't work for this project unless the copper prices are over the moon. And so they've been looking at bioleaching as a way of making this project worth developing. And the big shock that happened on June 16th is that the Namibian Minister of Mines rejected their application for the renewal of the exploration prospecting license. And these are always good for 2 years and are usually renewed with land reduction if you are showing that you are actually doing something. And Namibia has become quite annoyed with speculators who acquire these EPLs and sit on them and don't do anything and rent them out to some junior who pretends to be doing something. And so they have started to crack down on this. But this project, Deep South had completed an updated PEA. It showed that this was worth almost $1 billion US with a 29.7% internal rate of return. The capex was only $340 million. So it hits on. This was at $3 a pound copper. At $4 plus, it's even better. And they were planning to proceed with a feasibility study. But the reason the government gave for rejecting the renewal was that the company had not advanced the project to pre-feasibility study. And from where I sit here in North America, it looks like the company was serious. It was advancing the project. It had raised capital. It had drill permits in place, was going to do more metallurgical studies. And so it's a bit of a shock to see this happen. And if this were the Congo, the obvious explanation is that somebody was trying to extract a bribe and didn't get it, and so the title was canceled. That's how life is in the DRC. But Namibia is not that kind of country. So we'll have to see what's going on here. Maybe there's a backstory which explains that this is a unique situation, that the country may finally have gotten fed up that this asset, which has been around for 70 years, still hasn't been developed, even though it's the best of its kind in Africa. We'll have to wait and see. But in the that still leaves the question of Namibia Critical Metals and its Lofgold project, its rare earth deposit, which it discovered in 2010, for which it completed a PEA in 2014, and only last year started doing more work. And this thing has had several EPL renewals. In fact, the most recent one, it expired in May of this year, May 14th to be exact. And they did apply for a renewal on February 12th, and they haven't got it yet. So technically, they do not own the project anymore. And JOGMEC has spent a whole bunch of money and is planning to spend more on metallurgical studies this year. So, yeah, the question now is, are they going to expropriate this deposit also because it hasn't been turned into a mine yet? Well, there is a bit of a difference. The company just filed its technical report for the new updated resource estimate. This was completed after this additional drilling that they did last year, and with the JOGMEC's money, and it substantially expanded the resource. This is no longer a little flash in the pan, short-term solution to the world's heavy rare earth needs. It's a significant long-term solution, and they probably still haven't even discovered all the similar xenotime-hosted mineralization available on this project. And in December, the government of Namibia finally responded to their November 2016 application for a mining license and said that, yes, they gave them notice that we're finally ready to grant this application of a mining license. And that would supersede the exploration license. It would be a much stronger term, a type of title. It would be good for 25 years. It's not quite the same as what we would call a mining lease, which is a go-ahead to start digging up the ground and building stuff on it, but it is a much more secure form of title, and it is what Deep South has not yet managed to acquire. And in today's press release, where they announced that they had filed the technical report for the Lofgold resource estimate on CEDAR, they indicated that they had received notice of renewal of what they call an environmental clearance certificate, and this is handled by the Ministry of Environment and Forestry, not the Ministry of Mines, but it is a key condition for granting the mining license. They had it before. It was up for renewal. So the chances are very high that in due course we will get notice that the Lofgold project has been converted to a mining license. So I'm not as concerned as I was a couple of days ago when I hadn't yet read all the details in the technical report where you can find it, that something strange is going on in Namibia. But there is still something wonky in Namibia on the Grootfontein project, for which over a year ago they got permits for doing an airborne geophysical survey over the entire property. They were set to go earlier this year, and all of a sudden the Namibian Air Force objected and said, no, we just saw your flight plan. You're going to endanger our powerful Air Force. And so this has been stalled. The company has been hoping that people can figure out that their little airplane dragging this little metering unit is not going to cause any problems for the Namibian Air Force. But so far there is no progress on this front. It's not clear why. The company is getting ready to proceed to Plan B, which is to simply take an RC rig, go into the Highland target area, which is in the western part of the property, where they have targets already outlined by Soil Geochem, where they don't need an extra layer of geophysical data to justify drilling these targets. They may just go in there and test that part while they wait for this to resolve. And one of the other unfortunate things is that the Delta variant from India has now made landfall in Namibia, and they are undergoing a COVID surge, and government functions are locking down again, which means that anything that requires permits and renewals and that, all of that is going to grind to a halt once again. So it's unfortunate that this COVID business just can't seem to be ended. It's even more unfortunate that in some countries the The vaccine hesitation is political rather than, as in the case of Namibia, it is pure fear by the people that there's something wrong and suspicious about these vaccines. There's all kinds of misinformation out there about it. But here we are seeing also, resurgence in South America. Whether it happens here in North America, hopefully not. Hopefully there's enough vaccination here that whatever happens stays isolated in those communities where those people are, for whatever reason, against getting vaccinated. But as far as Namibia Critical Metals is concerned, and probably most of the other serious companies in the country, such as Osino and its Twin Hills project, I don't think there really is going to be a wave of this type of property confiscation that we're seeing with this Deep South resources situation.
We'll have more with John Kaiser right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with John Kaiser. John, will Discovery Harbor get a chance to make a discovery at its Caldera project this year?
Well, Discovery Harbor stock was up today because they finally got notice from the U.S. Forest Service that the plan of operations to drill the Caldera play has been approved. They've got 10 sites ready to drill. The company has managed to nail down a drilling company and crew. They can't begin until August, but at least they have permission to go ahead and test these targets. I did a fairly good update on March 17th on Discovery Watch, which I suggest people track down and listen to again to get the background on all this story. The company has been working on this for, almost 2 years now. They got blindsided last year because COVID interfered and they had some bad advice about doing these raptor studies, and then all of a sudden these were needed, but it was the wrong time of the year to do it, and then there was some issue about some archaeological studies that needed to be done, but they finally have these approvals. And the story at Caldera is this is not a new epithermal play. It is an older one, and that's of course why they had all these issues with archaeological stuff. There's all these little glory holes and garbage piles left behind by prospectors, which might be of heritage value. But this project's never been explored deeper, and it's a low sulfidation epithermal system, and it's all about where was the boiling zone within the vertical column of this. And the company thinks that what's exposed at surface is quite high up. So the fact that there's no mine here, just little holes dug by people who are seeing a smidgen of gold, that's because it is too high in the system and it requires deeper drilling. So this round of drilling, which will begin, will assess the system at a depth where it's never been assessed. And so it has the potential to deliver bonanza gold, silver intersections, which show that this entire project is in fact a very significant new gold play in the Walker Lane. And that's why the stock responded today. People have been it's been sitting at 6-7 cents. They're never going to get this permit. Now that we have a Democrat government, it's going to take even longer. But it's finally happening. And out on the flats where in March they optioned the Fortuity 89 project to Newcrest, it's ironic because that might actually be drilling also by September, October. That's under the jurisdiction of the BLM, the Bureau of Land Management, and it's out in the flat gravel-covered area with just an outcrop. It doesn't have the forest and the historical artifacts and the wildlife living there, so it isn't a headache. You're basically just drilling through flat desert on blind targets. So we could end up seeing 2 significant drill programs underway by September, October, with results from the Caldera project flowing by October, and new discovery for us to get excited about and to continue to watch well into 2022.
John, thank you so much for the update, and have a great Canada Day and Independence Day.
Yes, and the same to our listeners on both sides of the border. I wish them well also.
My guest has been John Kaiser. His website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.